Welcome to the Real Estate Investment Podcast with Colin Murphy, a podcast for anyone who wants to learn more about building a rental property portfolio with strong cash flow and stable tenants. Here's your host, Colin Murphy.
Hi, everybody. This is Colin Murphy. Welcome to Podcast 31. I've got an awesome guest on today's show. I'm speaking to Fettke. She's one of the most respected voices out there in the real estate industry. She's someone I've had the honor of knowing and frequently working with for almost 3 years now. So many of you will have heard of Kathy, but for those who haven't, she's the co-CEO and co-founder of the Real Wealth Network. It's an organization dedicated to helping people get the most cutting-edge information they need to succeed as real estate investors. It's an amazing company, and it's been ranked as one of America's fastest growing for 3 years in a row by Inc. magazine. So Kathy's a super busy lady. She's a frequent guest expert on places like CNN, CNBC, Fox News, NPR, CBS, the Wall Street Journal. It goes on and on. She's also the author of a #1 bestseller called Retire Rich with Rentals. She's the host of the Real Wealth Show, which is a very popular real estate podcast. And she's a licensed realtor. She's a former mortgage broker and an active real estate investor. So I'm very excited to have Kathy on the show. I think you're going to love it. Kathy, how you doing? Welcome to the show.
Thank you. I'm doing wonderful.
All right. Well, it's great to finally get you on it. I've been hoping to do this for a while. So thanks for setting aside some time on an early Thursday morning to chat.
It's actually quite brisk and chilly out here in California.
All right.
Maybe some people would disagree, but I'm assuming it's colder here than in Florida.
Probably, but I think our listeners in Detroit and Ohio and New York are probably feeling not too sorry for us.
Yeah. Right. Probably.
So listen, a lot of our listeners will definitely know who you are, but for those who don't, can you tell us a little bit about yourself and how you got involved in real estate?
Sure. Yeah. I'm the co-CEO of Real Wealth Network. We have over 40,000 members now who we're helping to build wealth through cash flowing real estate nationwide. So for people who are realizing that it's a really good time to reposition their assets and maybe sell one overpriced, under cash flowing asset and 1031 exchange that into several high cash flow properties that are already renovated, aren't going to have all these, nickel and dime repair problems in areas that are still emerging. Then this is just a really fantastic time to do it. But can be an overwhelming thing to do, a 1031 exchange. So we just help make that easier for our members.
Wow, 40,000 members. That's incredible. So is it right to say that your company is all about helping people improve their lives by building passive income streams through real estate? Is that what it's all
Absolutely.
about? Absolutely. Part of it?
That's why we call it Real Wealth Network. We define real wealth as having both the time and the money to live life the way you want to. And sometimes it has nothing to do with money at all. It might be like me right now. Real estate has given me the opportunity to be with my sister who was diagnosed with lung cancer a month ago. And I was able to sort of just drop everything and be here for her because of the passive income streams. So it's just really the idea of not being a slave to your job because you have this backup of passive income from assets. And yes, that's what we consider real wealth.
Yeah, I couldn't agree more. And I'm sorry to hear about your sister. And I agree that working kind of full time in real estate and having a good team does give you that freedom to stop and do something else, whether it's to have fun or do something important with a family member. So yeah, real estate can make a huge difference. So I get a lot of people looking to replace, their day job income with passive income, and I'm sure you get way more. But what are the most important steps they actually took to do that? I mean, what kind of discipline did it take? Because I know 1 or 2 houses is only the start. It takes more than that.
Well, I think people need to really understand that real estate performs over the long term. So, sometimes someone will look at a property and think, okay, this doesn't cash flow high enough, or or, oh my gosh, what about tenants who might do damage or a vacancy or something like that. You can't think short term because that'll drive you crazy. The most important thing is to make sure you have plenty of reserves and set aside, because there will be repairs. It's property. It's, you know, things need to be fixed. But if you have the
Sure.
reserves set aside, and I often say 6 to 12 months of the rent. So, $5,000, $5,000 to $10,000, have that set aside. So when that emergency happens, you're not shocked. It's just like running any business. There's expenses that need to be accounted for. So make sure you've got the reserves. Really make sure you work on your credit, because today, even though people complain about interest rates going up, interest
hmm
rates are historically low right now. And, you could still get a mortgage on an investment property for under 5%. That's incredible. So these are, to make sure your credit is excellent so that you can get up to the 10 loans that Fannie and Freddie, that conventional finance will give you, up to
hmm
10 loans to buy 10 different investment properties at, under 5% rates that are locked in. That payment is locked in for 30 years. There's just no other country that offers such a thing.
Yeah, and
And
I
yet,
can echo that as someone who's taken mortgages in different countries. That people assume that it's normal to get a 30-year mortgage at a fixed interest rate, that you literally know what your mortgage payment is going to be in 20 years, in 25 years. That's not normal. That's a privilege, and yeah, I agree that people should take advantage of it.
it's unfortunate that Americans don't understand. I've worked with so many foreign investors who listen to my podcast. So they say, how do we get those 30-year fixed rate mortgages? It's like, I'm sorry, you can't. It's for Americans only, and because it's subsidized by our government, but the Americans don't see it. There's so many people don't even know they can get that many loans, let alone have it be fixed for 30 years. But what we know for sure is that the rents that you charge for that asset are not going to be fixed. They go up over time. So you have a
hmm
fixed payment, but you're getting higher rents. So it's an incredible scenario. And on top of that, you've got tenants paying off that loan for you. So again, if you can just get over the fear of, oh my gosh, a vacancy, or oh my gosh, a repair, that just calculate that into the long-term plan and understand that in 30 years or less, you're going to own that property free and clear. And now all the rental income is coming to you with no mortgage payment. And I'm guessing, I think you'll agree with me, that the property will be worth more in 30 years.
How much more? And I also think sometimes people focus, almost exclusively on how much income can I earn from this property, whereas I think, and you feel free to disagree with me, but the real wealth you get from owning a real estate portfolio isn't necessarily the income, because the passive income won't really make a big difference to your life for maybe 20 years, 25 years. But what does make a massive difference to your net worth is actually owning those properties and watching as the capital, the value of the property appreciates over time. And while that's happening, your tenant's paying your mortgage for you, and the bank gave you money to buy the property, and you're getting tax advantages by owning the property anyway, but you're getting wealthy just by owning those assets, probably more so than receiving the rental income.
Yeah, and again, it just depends on where you are in life. We did an investor panel at our last Real Wealth Network event, and there were people on the panel, members who have bought through other teams that we recommend people to,
Mm-hmm.
and they were of all ages on the panel. So one was at sort of in retirement. He had a large portfolio that he had built over the years in the stock market, but he didn't feel comfortable at his age and in his 50s, getting close to 60, having his nest egg that he'd worked on for 30 years in the stock market, knowing that it's a teeter-totter. You just never know he didn't know if his retirement would be there tomorrow, and that wasn't comfortable, obviously.
Mm-hmm.
So he took all of his retirement and put it into real estate, which does cash flow. I mean, and he wasn't getting cash flow in the stock market. So for him, taking his nest egg, buying investment property, he was able to retire with cash flow. So for him, it was all about the cash flow. But also on that stage was a young couple in their mid 20s, and
Mm-hmm.
just brilliant military couple, both in the military, not not big income earners by any means, but
Sure.
they knew how to live on a more affordable lifestyle on a budget, and they saved money, and they every year buy a house. Now they're in their mid-20s. So
Wow.
if they each buy 10, which is their plan, now they're like you said, they're not buying for the cash flow, not like the older guy. They're buying for retirement. And they're getting 10 each because these homes are under, 100, around $100,000, so they can each qualify on their very low military salary,
Hmm.
one a year or more. I think they bought 4 last year because they've been saving. Um, and they uh, so imagine if you have 20 properties by the time you're 30, by the time you're 50, they're going to have those paid off.
Oh, they'll
I
be
mean, it's
multimillionaires. And
they'll
and
be
the
they'll be
difference
multimillionaires.
the
Yeah.
difference between starting in your 40s and starting in your 20s is night and day. I mean, I started really properly in my 30s, but if you start in your 20s, it makes a massive difference. I know you've got kids in their 20s. You're trying to get them involved in real estate. It makes an enormous difference if they can get started and have some discipline, right?
Well, my older daughter, who's 26 now, was kind of mad at me when I pretty much forced her to buy. Not really. She was 24, and she came to me and said she wanted to buy a new car, and I said no. Now you're going to have debt to income. I mean, she can do whatever she wants, right? But I said now
Sure.
your debt to income ratio is going to be up because you're going to get a loan, and it's going to make it harder for you to buy a property. So buy the property first. Drive your old car for a little longer. It's fine. There's nothing wrong with it.
Hmm.
Just maybe needed $1,000 repair. Just do that, and instead qualify for a home. And she was like, I don't want to own a home. That's too much work. I said, you know what? Just look around and talk to a lender. And she did. She found out she could buy a home with just 3% down. Again, another amazing
Nice.
American ability, that we have.
Yeah.
And she could buy up to $300,000 home. And she lives in Northern California, where that is actually a possibility. So she found a home for $250,000 that needed some repairs. Was able to buy it again with just that 3% down. She had that in savings and great credit. And sure enough, the first year was a lot of work because she got a deal on it. She had to fix the bathroom, but she started to become a little Joanna Gaines. Just started to love it, and started to. She did all the painting herself. Started,
Oh, wow.
to the bathroom remodel herself with some friends. Just completely tricked out the yard and made it just absolutely beautiful, beautiful garden.
That's
And then the
amazing.
fires happened, and all there are 14,000 homes gone in California nearby. And so her house suddenly became extremely valuable. She
Oh,
probably made
wow.
over $200,000 already in that year, and rented the place out for $2,000 more a month than she's paying. So she's finally gets it. She's
Oh
like,
my
Mom,
God,
you're right.
that's a home run on your first deal. I mean,
On your first deal,
that
that's
doesn't normally happen for whoever's listening. You don't normally get a home run on your first deal. And but I guess she's lucky to have a mom advising her on what to do. It's a bit more likely to make a great decision when you do. Um, but look, one of the mistakes I see people making sometimes, Kathy, is that they look at prices rising and they decide to wait until they start falling again. So they kind of decide to hold off until something in the market changes. And while they're doing that, other people, like your daughter, are busy building portfolios. I mean, what are your thoughts on trying to time the real estate cycle?
Well, my thoughts on that are time it where it matters. So, for example, in 2005 and 2006, we knew that California home prices were just way over the top. I mean, nobody
Hmm.
could afford it. Affordability is the key. You've got to pay attention to that. So in 2005 and 2006, I knew that people were getting loans they couldn't pay, and I knew there was going to be a bloodbath and it was time to sell. But that wasn't the case for the entire country. In Texas, the opposite was happening, and their property values were 26% undervalued. So you had this amazing, unique, one of a time opportunity to sell your California property at the peak
Hmm.
and exchange it into Dallas, Texas property at the trough. And everyone thought we were crazy for advising that, because it was like, why would you sell this hot property in California for some, to Texas where nothing ever happens? It's like, well, boring sounds really good right now. So we helped people sell, like one lady sold 3 Stockton properties in 2006. We helped her
Hmm.
sell those for $420,000 each. They each rented for $1,200. They were old, always in need of repair. She made no cash flow because she
Yeah,
was
it's terrible.
terrible. So we got her 9 brand new properties, all like fully renovated, gorgeous, brand new for about $150,000 each. So she was able to exchange 3 properties into 9 that were new and nice. She quadrupled her cash flow. About 18 months later, the California properties were worth about $75,000 each.
Hmm.
So the person who bought her properties for $1.2 million was sitting on a $300,000 portfolio. They lost everything. She, on the other hand, didn't lose anything. All of her properties were secure in Texas, and where she had quadrupled her her cash flow, and the values have gone up about 3 times. So she never felt the recession. So if you time it right, like right now we have the same situation. You can sell overpriced property in markets that have passed their affordability levels.
Right.
Sell those and buy in areas that are still on the upside, that cash flow. Timing it is a pretty exciting thing, because you can literally cash out and then get into something better.
I agree. And I've also always found that you lose more generally by doing nothing than by taking action and maybe making some mistakes along the way. Like the people that sat on those California properties in 2005 and 6 did a lot worse than the people like your friend who took some action, sold them, bought some in a market that was clearly in a different part of the cycle.
Yes. Yeah. But, for sure, if you were wise enough to buy that Stockton property when it was $75,000,
Oh, sure.
buy California, buy the sexy markets when they're cheap, not when they're expensive. But everybody does the opposite. They come in and buy in California when it's already at the top, and then they just get to enjoy the ride down, instead of buying, if you bought in California in 2009 or 2010, you'd be pretty happy today. Then it'd be time to sell.
I agree. And speaking of multiple markets, I mean, it's funny. I'm a property flipper, so it's a little different for me. I only got successful when I went very deep in the Tampa market. I used to be active in multiple markets, and I was just getting by. But we only got really successful when we went very deep in the Tampa market and became experts in certain areas. I mean, what are your thoughts on going deep rather than going broad? Is it better to research and own like 10 or 15 homes in one market, or should you spread it around?
I am a strong believer in spreading it around a little bit. So because, we refer people to you because of what you just said, because you're an expert in one market. And that's what we look for in a property provider. But for the person owning the assets, I just think a little bit of diversification is healthy. If I were to exchange $1 million property in California where I could go buy 10 somewhere else, I would probably buy 5 in Tampa and 5, somewhere a little bit further away, so that if for any reason, there was some kind of environmental situation that happened, or if there was an economic, whatever, you've got diversification. So I could maybe have 5 properties in Ohio where it's just kind of boring, nothing happens, but it's very stable, and then 5 in Tampa, something like that, just so that if I saw a hurricane coming, which people worry a little bit too much about, I think, in Florida, because I know you guys have been through several and the properties have done pretty well.
Yeah, they're still standing.
They're still standing, but when you're overseas or in California, it doesn't feel that way. So at least if you knew you had a few properties elsewhere, that you have it diversified.
Okay, so aside from diversifying a little bit, what other strategies would you recommend for people that are looking to invest in real estate this year?
I would be very cautious about going into areas. I mean, you look for the affordability. The affordability. If the average person cannot afford the average home as either a purchase or a rental, there's going to be a problem. You're going to see a slowdown eventually, because it all comes down to affordability, which is why we're seeing a slowdown in California in the high end. It reached its max. Plus, we have a lot of Chinese buyers no longer here. So a lot of that's important to look at. Chinese buyers really fueled the market and certainly in California, in Southern California, in San Francisco and Seattle. But the Chinese government has been very strict in the last year last couple of years, they really disapprove of investing. They want investor dollars in China in some of their projects. And,
Right.
you don't want to upset the Chinese government, if you're a big player
Mm-hmm.
there. So we saw a huge pullback, and that is going to affect the higher end. But, so that be very cautious. If it's not affordable to the average person, there could be issues down the road. If we did have a recession, which we may or may not, I mean, the economy is pretty strong right now.
Mm-hmm.
A lot of people are saying a recession in 2020. It could be very mild. It could not happen at all. The economists I listen to think it will just be pretty stable. No massive recession. Just
because most recessions aren't like 2007 or 8, right? Some people, anybody that's been around for 40 or 50 years has been through multiple recessions. But younger people, when you say recession, they might think, oh, like what happened in 2007. But it's very unlikely that the next recession is going to be as severe as the previous one, right?
Well, it's hard to say. So you're right. So recessions are healthy, and we have to remember when an economy is booming like it is today, prices end up going up, and it causes inflation. So the Federal Reserve wants to slow that down in a healthy way so that prices don't get out of hand. So we like recessions as consumers, right? We want prices to not be, out of control.
Oh, sure.
People need to understand that, not every recession is like the last one. That was caused by stupid mortgages, liar loans, and the banking system doing stupid things. And we don't have that today in the housing market. It's been the opposite. So you've got people in the housing market locked into low interest rates. Some of those people that bought in the last decade are locked into 2%, 3% interest rates. And they bought when things were very cheap. They are never going to leave those homes. They're not going to get out of those homes so that they could pay more today to have higher interest rates. Or if they were to leave their home and rent, they'd be paying 2, 3, 4 times what they have on their mortgage payment. They're not leaving their homes.
And they'll never get foreclosed on because their home is going to be worth more than the mortgage.
Exactly. They're not going to do that. And we didn't have Airbnb back in the last recession. Now, if you ran into trouble, you just rent out a room. It's become common. So, don't expect, I had a guy come to an event in San Diego that we had, and he said, oh, I'm not buying anything today. You guys are crazy. I'm going to wait till the property's a fourth of what it is today. I said, well, you're going to be waiting forever. That's not going to happen. You're going to miss out. It's just not going to happen. So the only reason we would see a major economic crash is if we couldn't figure out the national debt problem. But I don't see that happening any day. We've been living with national debt for a long time. It's not a good thing. The way that the current administration is trying to deal with that is by creating such an economic engine that we make enough money that we can pay off the debt. But there'll be some kind of way that we work our way out of that. It may be through inflation. But remember, all of those things are actually good for real estate because the more there's inflation, the more your assets worth, right?
Absolutely. Absolutely. And speaking of opportunities, I know you've been talking a good bit about the huge potential of investing in opportunity zones recently. And I'm super excited about it. But for listeners who don't know much about this new initiative, which is going to be one of the big deals in 2019, can you tell us a little bit about it and what you're going to be?
Yeah. It was a little tax loop that was put into the tax law last Christmas. It just slid in at the very end. People don't really know about it. It's not finalized yet. It should be just by next month. But it is an opportunity that's why it's called the Opportunity Zone, to be able to sell an asset and take the capital gain from that, the capital gain that you made on that asset, and invest it into these designated areas across the country where the government wants to see growth. It's the redevelopment areas. Every governor got to choose certain areas of their state where they want to see growth, and they are called opportunity zones. And if investors invest in those areas, they're going to get really nice tax breaks if they sold another asset. So in other words, if you sold a stock, if you sold a property and you made a bunch of money on it, you have to pay capital gain. You could defer that gain until 2026 if you buy into a business or real estate in an opportunity zone. So again, talk to your CPA, or we have a couple webinars on our website. But the exciting thing is the new property you buy, you need to hold it for 10 years. And if you do and you sell it, you pay absolutely no capital gain on that. So
Wow.
it's unbelievable. Like if you made $1 million in Apple stocks and you sold it, or whatever, in a property, you sold that and you'd have to pay your capital gain on that $1 million gain. But instead, you could take that $1 million and invest it in an opportunity zone. You don't have to pay the gain till 2026. So you have all that money working for you. And then whatever you invested in, let's say it doubled in value in 10 years, which is certainly possible, especially through people like you. Now you've made another $1 million and you pay zero gain on that. So it's unbelievable.
I agree.
Yeah.
It's going to be tremendous. And there are some amazing opportunity zones here in Florida. And as you said, the governors picked the areas for the opportunity zones. They didn't necessarily just pick the areas that were most in need of money. A lot of the areas they picked were just absolutely fine. And some of the areas that are opportunity zones have got higher than average per square foot sales prices. So they're clearly not as distressed as they could be. So people have this chance to invest in areas that are already doing very well, and they can get an amazing tax write-off as well. So it's watch this space. I'll include some links in the show notes. If I can get some of your webinar links, I'll include some of those so that people can learn a little bit more about it. And maybe I'll try and put in a map of the opportunity zones so that listeners can kind of zoom into where they are in their own locality, because they're pretty much in every zip code throughout the country. You'll find some.
You'll find them all around you. And the important thing to understand is that investors are going to be investing in these areas. So you're going to see growth. Not every opportunity zone. You need to take the philosophy of this area is going to improve over the next 10 years. If it's out in the middle of the boonies and there's no infrastructure and there's no chance it's going to be better in 10 years, then pass. But there's a lot of areas where you could go, oh my gosh, this is so close to the growth. This is, you could see why these areas will be growing. It's going to be phenomenal.
Yeah, I agree. And it's back to that path of progress again. If you can get in the path of progress, it's you're going to make some money. And if you can get in the path of progress that happens to be an opportunity zone, that's your chance to get a home run.
But you got to understand there's a lot of rules. So a lot of people have said, oh, okay, I'm going to go, I already own a property there, I'm going to go buy one. It doesn't work like that. There's rules. You need to understand them. It needs to be an opportunity zone fund, which means you just need to open up an LLC and call it an opportunity zone fund.
Right.
Or invest in somebody else's fund. But there's rules. Don't just run out and buy a property in an opportunity zone and think that you get that tax break. So just get the right information, and it's worth the effort. Let's put it that way. It's worth understanding.
I agree. And so let me pivot a little bit. You're a super busy person between your business, your podcasts, all the various initiatives you're involved in, the speaking at the different events. I mean, how do you manage your time so effectively to get so much done? I mean, maybe it doesn't feel like you are, but you're clearly a productive person. You're getting a lot of things done. What's your secret?
Oh, thank you. Well, 10 years ago, I was doing almost everything myself. Maybe 12 years ago. And then slowly but surely, we started to add people to our team who could do things better than me. So the first hire was a bookkeeper, because I'm real bad at that. Then, we went on from there, and now we have a team of over 20 people who are better at certain things than I am. So we've got Tim Horvath, who runs around the country finding people like you that can find great deals in these areas that are emerging, that are in the path of progress, where you can get cash flow today and a very good chance of equity growth because of everything that's happening in those areas. So he runs around and finds the teams and finds the deals and helps investors get these cash flowing properties. Then we've got, my husband is now on board, and he's practically running the whole company at this point. I've got an amazing news writer that I used to work with when I worked at Fox. I took her, and she works for us now, and she's the one who brings us the news for the real estate news podcast I have. So just that's how I get it all done. I've got really great people supporting the Real Wealth Network.
No, I agree. I've met most of your people, and they're all amazing. They're all extreme. I don't know where you found them, and I need to figure out how to do a little bit of that myself. So just thinking of time. Any advice then for investors that are struggling to find time in their lives to source deals, source properties that they can use to build portfolios with?
Yeah, get rid of, the stuff you're not good at or don't like doing. I mean, whether it's house cleaning or bookkeeping or cooking even. I mean, there's now Rich and I just have meals delivered to our house that, they're already made. They're organic food. So just look at what's taking your time
Mm-hmm.
and simplify it. Find other people who can do that for you. And sometimes you'll find it's not even that much more expensive, especially if you look at what your time is worth. So to have the food delivered, at first I was like, oh honey, this is going to cost too much money. I don't know about this. And in the end, between the time I save not cooking, and the fact that food costs money, it's actually cheaper. It's amazing. So
No kidding.
yeah.
No, I recently discovered Instacart, which means somebody can do all my shopping for me, which was a game changer. Saved about 3 hours of my week just by getting somebody else to go to Publix and go to Costco to do the shopping. So you're right.
Oh
There
my
is a lot of things
gosh.
you can do to save time. And it's not just about
Instacart.
sleeping
Oh
less.
my, that's
Instacart.
a
Yeah.
great tip. Thank you.
Go for it.
Love it.
I know. Let me think. What else do I want to do? So yeah, we're going to wind down now. I like asking our guests to describe any crazy real estate experiences they've had, any crazy people they met, or any weird situations they found themselves in during a real estate experience. I'm sure you've had more than a few, but are there any that you can think of that you can share?
Oh, where do you want me to start? I'll tell you the best one. I'm pretty well known now in the real estate
Mm-hmm.
industry, and we've got a big following, and we find people like you, just really amazing experts in certain markets who have this ability to find deals nobody else can find, and renovate them to almost new quality and place a qualified tenant and offer ongoing management for a turnkey investment. But we find these people all around the country, and we have a referral. Um, we refer people to them,
Mm-hmm.
and so we found this one guy outside of Pittsburgh, not our current Pittsburgh guy, but Pittsburgh, Pennsylvania is growing, and it's one of those emerging markets.
Sure.
And we found a team there that was really good. They really had some cool projects, but because we have this referral based business, and it sort of becomes easy because we have so many interested buyers, that this guy just started to think, he just got greedy. He was like, oh, these people are so easy, they'll just buy whatever I've got. And one of those people was me. So I
Oh.
called him and said, because these initial deals were amazing, like so good, like some of the best we had. And so I just said, hey, I want to buy a property. And he says, great, I got one for you. It's really great. Wonderful. And you know what I didn't do? My due diligence, because I was like, who's going to rip me off? That would be bad. I've got a really loud voice and a really popular podcast, and I will, anyway, so I bought this property, Rich and I were excited about it, and didn't get an inspection, didn't get an appraisal.
Oh.
And then I went to see it after we closed because I just happened to be in Pittsburgh. And I think the neighbor came over and said, you realize that house is red tagged, like it's going to fall down. And so I went and talked to the family. I said, are you guys, I'm the owner. Are you okay? And they said, well, it looks like the floor is sagging. So I finally went in, and I was like, this house is going to fall down. And they had young children.
Oh, wow.
So I went to the city. I'm like, is this house red tagged? And they said, yeah. So this guy sold me just the biggest piece of junk. I was able to, get him to buy it back. And, but it was just an example of like, okay, first of all, bad on me. Like you shouldn't buy a property from your own mother or child, or anybody without doing your own due diligence. Like, don't trust anyone blindly.
Right.
That's just a normal thing, is to just make sure you're getting what you think you're getting. And that can be done through an inspection. So never skip that. Get your inspection, get your appraisal, make sure you know what you're getting, especially if you're not going to go see it yourself. You've got a third party doing it for you. So that was my big lesson is I had to literally pay this family to leave. I said, please leave. I don't want this house to fall on your babies,
Right.
And they did. We paid them to move out, but it was really just unbelievable. It's unbelievable how some people can change when it comes to money. And he
I
just
agree.
saw dollar signs. That's what happened. So
He just
that's
saw like a condemned house that you can probably
yeah,
buy for 5 or 10 cents on the dollar and
yep.
sell it
And
for about 7 or 8 times that amount. And he thinks that's, being a smart businessman when he's, lucky to be, not in an orange jumpsuit.
yeah, we tried to put him in one. Trust me. And
Hmm.
and this is the thing I want to tell you: is he's still out there doing business, and it's amazing. And so people just look, if somebody has a website and says they do turnkey property, or they worked with Kathy Fettke at one time, and I don't know what he's saying, but just our current referral list, they are wonderful people with a long track record. Even so, you still got to check what you're getting, because maybe they missed something, or maybe um, you know there's an issue that whatever. Just always get your inspections and appraisals. Always do it. It's just
Absolutely. I mean,
yeah.
it's a couple of $100 and you're spending $200,000. So yeah, absolutely get your third party inspections and appraisals for anything you're buying from anybody, from somebody on the other side of your country to your brother across the street. So I'm
Mhm.
totally with you on that. And, speaking of, all these great people that you're working with, and thank you for the compliments. I know you're excited, and I'm certainly excited about bringing investors and affiliates together for your East Coast Property Showcase in Tampa, which is in about 2 weeks now, on the 9th of February. So are there any spaces left if anybody wants to come? And if so, how can they find out more?
That is filling up really quickly, but yeah, there's still space left. That you can find out at realwealthnetwork.com. That's real like real estate, wealth like your money, and network as the network we have nationwide of property providers like you. So realwealthnetwork.com, you can sign up. It's free to attend, and we'll have 13 teams from different markets across the country. So it's kind of like a one day to meet all these different teams and learn about what's going on in Chicago real estate, and Detroit, and Cleveland, and certainly Tampa, and
Hmm.
all these different markets to compare and say, wow, I wonder which one is good for me. So if you're in the middle of a 1031 exchange, you would definitely want to take the time to attend this event on February 9th.
All right. Well, I'll be there. You'll be there. And finally, if anybody wants to find out more about you, Kathy, or the Real Wealth Network, what's the best way?
You can either go to realwealthnetwork.com. It's free to
Hmm.
join, and there's just an enormous amount of resources there, data on different emerging markets around the country, lots of info. We do webinars every week for free. One, like I said, we have 3 on the opportunity zones done by a CPA. So
Hmm.
lots of resources for free at realwealthnetwork.com. And then I have the Real Wealth Show on iTunes, and also Real Estate News on iTunes and Stitcher.
Perfect. I'll include some links to that in the show notes. Well, thank you so much, Kathy. This has been awesome. I really enjoyed chatting to you, and I appreciate your time.
Thank you for having me.
All right. You take care, and I'll see you soon.
All right, take care. We'll see you real soon.
There you go, folks. That was podcast 31 with Kathy Fettke. She is one of the best known real estate personalities in the country. And I hope you enjoyed those words of wisdom that we heard in the show. I'd recommend you check out Kathy's podcast and her website if you haven't yet. You'll see details on the show notes. And also, if you'd like an opportunity to network with dozens of investors who are building real estate portfolios, and if you'd like a chance to listen to experts on 15 different markets throughout the country talk about renovated homes that they're offering to investors, then come on down to Tampa during the weekend of February 9th. I know it's not a lot of notice, but if you can do it, we're going to be there. The event's in St. Petersburg, actually, which is beautiful, in a hotel near the waterfront. And you'll find more details on the show notes, okay? But aside from that, thanks as always for tuning in. And as you probably noticed, after 30 odd episodes, I've finally gotten someone else to edit and produce these shows properly. So hope you like the new music and the voiceovers. Your feedback is always welcome, as are 5-star reviews on whatever platform you're listening on. They're a big help to get our podcast out to a wider audience. All right. So that's it from me for today. I'll get back with you again soon. And yeah, you have a great day. This is Colin Murphy signing out.
Thank you for listening to the Real Estate Investment Podcast. For new episodes and more tips on building a rental property portfolio, hit subscribe in iTunes, Stitcher, and Google Play.